Well, welcome everyone to Vanderbilt's new Web3 Plus talk series. Today, we're going to be talking about asset and currency investment. We're going to explore crypto trading, how to research offerings, how to research different crypto projects and coins, resources our experts are going to share with us today that they use. We're going to talk a little bit about the currency aspects of crypto, but also a lot of variety of other uses and projects that are being enabled by this technology. My name is Dina Metter, and I am the Deputy Director at the Wond'ry and a serial entrepreneur that has developed solutions in both ed tech and fashion tech. For anyone that's not familiar with the Wond'ry is Vanderbilt's Innovation Center. We support faculty, students, staff, alums, and not just from Vanderbilt, but from all of the other surrounding colleges and universities throughout the region. We help bring ideas to life. We teach innovation process, and we help create social change and help people that are looking to start new ventures. I'm so excited to be here with you today, and I'm going to turn it over to Lincoln Murr. Lincoln is the president of Vanderbilt Blockchain, and he's going to introduce himself, tell you a little bit about what's going on with Vanderbilt Blockchain, and then introduce our three amazing panelists that we have today. Lincoln?
Great, thank you. Good afternoon, thank you everyone, and thank you so much for attending. So my name is Lincoln Murr, and as Dana mentioned, I am the president of Vanderbilt Blockchain, which is Vanderbilt's student-run organization whose goal is to accelerate the growth and adoption of blockchain on campus and in Nashville, and ultimately be the Web3 hub of the South. We hope to accomplish this through a few different initiatives, such as our development committee, where we're teaching a cohort of students the Solidity programming language, our research committee, where we're creating a Vanderbilt blockchain token portfolio, and our speaker series, where we bring in leaders in the blockchain space to lecture to our students. For those who are interested in keeping up with the club and getting in touch, we're creating a bi-weekly newsletter, and you can sign up with the Google form link that will be shared after the presentation. So a little bit about myself. I've been in the blockchain space for about 6 years now, and in that time, I've published over 100 articles, worked as a blockchain product manager for healthcare company Prescriptive, done graduate level research in an on-campus lab, looking into decentralized identifiers for patients within the rare disease community, served as a board member for the Blockchain Acceleration Foundation, gave a TEDx talk my freshman year about blockchain, and also was just recently a DevCon 6 scholar through the Ethereum Foundation. So now I'd love to introduce our speakers as well. So Peter Marshall is the co-founder and CEO of Walden Bridge Capital. Peter provides strategic direction for the firm and is responsible for investment decisions within the firm's hedge fund. Peter's been investing in the crypto asset class since 2014. Previously, Peter was a financial analyst within the financial consulting group at CBRE. Prior to CBRE, Peter was an associate at Ziegler Capital Management. Peter received a BA in economics from Vanderbilt University and a general course diploma from the London School of Economics. Clay Moffitt was born and raised in Atlanta, Georgia. Vanderbilt was a natural choice for him, as his mother is an alumnus. He graduated in 2009 with degrees in economics and engineering science. It didn't take an economist to know that the job market in 2019 wasn't ideal for new grads, but Clay was committed to moving to the Bay Area to work in tech. So he took a loosely paid internship working with a small company in Cupertino before good fortune landed him a job at Google, working on Gmail for education team. After Google, Clay managed operations for a healthcare company called Augmedix that does live medical scribing over Google Glass for physicians. In 2016, Clay took another operations and general management job working at Airbnb, overseeing interior design and quality inspections for the Airbnb Plus brand. After the pandemic struck, Clay began digging more deeply into the Web3 space that he'd been dabbling in since 2016. He took a role with Coinbase, where he manages the asset listings program that evaluates assets to decide whether they can be listed on Coinbase's exchange. He's thrilled to be able to speak to you all about this industry today. And last but not least, Ben Jacobs is a 2015 grad currently living in Venice Beach, Los Angeles. Ben is the co-founder and general partner of Cenas Capital, a crypto-dedicated asset manager focused on multi-manager strategies. Ben leads business strategy and business development at Cenas, where the firm invests directly into premier hedge funds and venture capital funds. An active member in the Web3 and DAO space, Ben has helped raise capital for 10 plus DAOs while also dabbling in NFTs. Prior to crypto, Ben worked at a number of tech startups while operating his own side hustle called Power Hour Tower, an adult drinking game e-commerce business that he ultimately exited in 2021. Back at Vanderbilt, Ben graduated with a self-created major in global financial economics. Thank you so much, and I'm happy to hand over to panelists now.
Thanks so much, Lincoln. So I was an early crypto trader, but I am nowhere near as versed as the experts, these amazing guests that we have here with us today. But all that to say, like, your questions are safe with me, right? They're safe with us. So if there's something that you have been wondering about, feel free to put that in the Q&A as we go. Before we dig in, because I have so much that I want to talk about, and I know this hour is going to go by really quickly with these great guests. I wanted to just throw out a few definitions. I'm envisioning, I think we have people on with varying levels of comfort in this space. So just a couple, and then what I've asked our panelists to do as we go is if they have a term that they introduce that I haven't given you a definition for, they're going to define it as we go. And if there's anything you hear that you have questions about, just put that in the Q&A. So let's start with just cryptocurrency. So these are web-based digital assets. They use cryptographic functions to conduct transactions. And by cryptographic functions, what we basically mean is just advanced math. This is math that can only be done by a powerful computer or most often a network of computers. Then let's go into blockchain. So blockchain is a ledger system that records transactions. They're verified by the cryptography that we just talked about. This blockchain is designed to be open, to be secure, to be accessible by all. And not just we're going to talk a little bit today about not just that ability to be able to record transactions, but also all of the other types of projects that this technology is now enabling. And then really quickly, Bitcoin versus altcoins. So Bitcoin is the most widely known and traded cryptocurrency, got its start in 2009. But other coins such as Ethereum, Litecoin, there's many, many others. Those are typically referred to as altcoins. And then Web3. So that's something you might hear. You probably heard a lot. Just it's been all over the news. There've been lots of articles written lately, but you may hear it also during this discussion today. This is basically the third generation of the internet. You know, you could think about Web 1 as kind of read only for viewing information. Web 2, we had read-write capability and it was very centralized. And Web 3 is moving into a decentralized ownership, kind of new way of the web. And then DAOs. So that is DAO. So DAO is a decentralized autonomous organization. This puts the decision-making power of an organization in the hands of the members. And you can think about it, it's really an emerging legal kind of governance structure, but you can think about it like a modern digital LLC. So with that, those are just a few of the terms you might hear today, but if you hear others and we don't define them, feel free to put that in the Q&A. I want to open up with having our panelists, because they all have remarkable backgrounds and very interesting stories about how they got into this space. So I'd love for them to tell us a quick story about what initially got them into the space. And we're going to kick that off with Peter, then we'll go to Clay and then Ben.
Thank you for having me. My name is Peter Marshall. As Deanna mentioned, I got in the crypto space several years ago. I actually came across Bitcoin when I was an undergrad at Vanderbilt back in around 2013. And I quickly realized that the idea of peer-to-peer value transfer over the internet was a breakthrough in finance and computer science. At the time I was studying economics, so I kind of understood in unison that this was a much more efficient way to do transactions. And I thought it was going to be applied much more broadly in the future to value in general, whether that's stocks, bonds, any kind of asset could be essentially traded peer-to-peer. And so I became extremely interested in that idea, started investing my own money, and today run a hedge fund that's solely focused on cryptocurrencies and crypto assets.
Cool, thanks, Peter. I think the first time I encountered cryptocurrencies generally was in 2012 or 2013. I actually built a PC. I was like a big gamer back in the day. And one of the things on Reddit that people were talking about using their PCs for was mining cryptocurrency. So I kind of fumbled around and actually was trying to set up my PC as a mining device at that point in time, but I don't think I ever pulled it off. And if I did, I lost the hard drive. So I'm fortunate that I didn't lose a hard drive with, dozens of Bitcoin on it. But that was kind of my first exposure. Then I didn't think about it for a while. There was a down cycle. And then in 2016 or 2017, my friend reached out to me or talked to me about Ethereum. And that was kind of like a whoa moment for me, because Ethereum basically, rather than Bitcoin, which is just like a digital gold, a store of value, essentially, Ethereum was that plus the capability to actually do stuff. There's the Ethereum virtual machine, and that really got my brain going. So that's when I really became a crypto investor. I invested in, started trading for Ethereum at that time, and have just kind of kept an eye on the industry since then. And the pace of innovation is so quick. That's really what gets me going now, is like seemingly every week there's a new idea or new technology within the space that you can follow and kind of go down a rabbit hole for. So here we are today. Ben?
Cool. Thanks, Clay and Peter, and thanks for having me, everyone. Really excited to be here. So my crypto story actually begins shortly after graduating from Vanderbilt in 2015, where I was planning on taking the GMAT to take the standardized test and hopefully go to business school shortly thereafter. And as I was studying, I recognized that I was far superior in verbal than I was in math. And to go to the school that I wanted, I had to get my math score up to par. And so I searched for best GMAT math tutor New York. I found this guy who was a retired hedge fund manager whose rate was exorbitant for an hour of his time, but he had nothing but 5 stars. So I figured it was worth a couple sessions, and true to his word, he was fantastic. And at the end of the session, he told me a little bit about his background, and he told me that I could pay him full freight in cash or 50% off if I paid him directly in Bitcoin. And this was my light bulb moment when I had someone who I viewed as incredibly intelligent and sophisticated, who had spent so much time and invested so much capital in learning blockchain and digital assets. So that kind of sent me down the proverbial crypto rabbit hole, where I've been investing and participating in the space since about 2015. I went full-time in the space in 2020, where I launched Senius Capital, which is a crypto asset manager pursuing multi-manager strategies, where we invest into crypto hedge funds and crypto venture capital funds. In addition to Senius, I've also been very active in the DAO and Web3 space, collecting NFTs for fun, but also participating in numerous DAOs and supporting them with governance and strategic operations, as well as fundraising. So it's been a whirlwind. I've seen a number of different cycles, but all I can say is I've never been more convicted that this asset class and this technology will change how every different industry functions going forward.
So Ben, you introduced NFTs. Do you want to give us a quick lowdown on what that is?
Yeah, so NFTs stand for non-fungible tokens. And the way you can think of it is a digital object that you can own online. So historically, you were not able to own a specific item online that was only present. But here, leveraging smart contracts on a layer 1 blockchain like Ethereum or a Solana, you can actually transact peer-to-peer or contract address to wallet and purchase a digital asset that isn't a currency. So it's an actual object. So the use cases for NFTs are endless. And I'm sure we'll get into those, but at a high level, that's how I would define it.
Thanks so much, Ben. And I love that needing to improve your score on the GMAT is what led you down this pathway. Okay, so now I want to transition. I want to go into a little bit of there's often questions around just using this as currency and then the volatility. So do you think that cryptocurrencies are ever going to live up to that actual currency part of their name? And then let's also talk about how the use case has expanded beyond that namesake. We're going to lead off with you, Ben, but then I want to invite Peter and Clay to both chime in as well.
Yeah, I think cryptocurrency was the first broad terminology used to try to define what is being built right now in crypto, blockchain, distributed ledger technology. But I actually think it's kind of a misnomer in that currencies are just a small element of this asset class. So currencies are a medium of exchange, and that was Bitcoin's original intention, was to be a peer-to-peer transaction system. However, you think about it based on how the blockchain works in order to be sufficiently decentralized and secure, ensuring that there's no double spend or any other issues with the transaction of capital. It was too slow. And so currency in its current form is not really commonly used for me going down to the coffee shop right now. So I think cryptocurrency is not currently used interacting with the real world, but there are crypto assets that you could think of as ownership in a network or ownership in a protocol or a project, which I think is a better definition. And that spans, again, there's crypto assets in music, sports, protocols, every different industry. And I think currency is just one way to think about this technology.
There's also, for that currency use case, there are things called stable coins that some people listening to the session might not be aware of. So that is a crypto asset that through various means are pegged to the price of a currency of choice. So there are many US dollar pegged crypto assets. So if you want to be able to sort of hold a cryptocurrency, but it just behaves like the dollar, you can just buy a sort of like well-backed or well-pegged stable coin on the US dollar. And then, 5 years from now, if you go down to the coffee shop and they say, we accept USDC, it's just like paying for a dollar and it will always be pegged to the value of the dollar. So there are kind of technological solutions that can avoid that kind of volatility question that you encounter with a lot of these assets that are out there.
Peter, you're muted.
To build on that, I don't think that cryptocurrencies such as Bitcoin and Ethereum will be used as currencies per se in developed countries. For example, in the US, we have a strong legal and banking system, and the dollar is very strong, as we've seen more recently, against all other government currencies. But I do think that Bitcoin and Ethereum could be used as a currency in countries where they have very weak legal and banking systems. We've seen Bitcoin accepted as legal tender in El Salvador, and then more recently, Central African Republic. I think more and more you're going to see cryptocurrency emerge as a viable solution, like as an actual currency in a lot of different emerging markets. In developed countries such as the US, Western Europe, et cetera, I think what we're going to see is that cryptocurrency and crypto assets are going to have much more of an impact on the underlying financial infrastructure, where you can leverage this technology to make existing capital markets much more efficient. And so I think, decentralized lending, decentralized trading, I see a world emerging where institutions just plug directly into these protocols, and their clients might not touch these systems themselves, but the institutions will be able to leverage the efficiencies on the back end to make a wide array of financial transactions much more efficient. So that's kind of how I see things broadly playing out in the coming years.
Awesome. Thank you so much for that, Peter. And I'm writing down notes as you guys see as we're going, and I'm going to circle back to some of these things as we go. So I want to jump into when you have assets, paper assets, dollars, right? You put them in a wallet. I'd like to talk a little bit about just some tactical things, like what's the difference between a wallet and having, say, a Coinbase account? And Clay, I want to let you lead that off since you're with Coinbase.
Sure, yeah. So Coinbase has two options, actually two and a half options in this space. So broadly, the terms that you would use in terms of wallets is custodialized versus self-custody. So Coinbase, when you create a Coinbase account and you register with your identity, so that's called KYC, know your customer. At that point, Coinbase can custodialize funds for you. So Coinbase has these crypto wallets, the same as any other crypto wallet, but Coinbase owns them, and Coinbase manages the keys, so the private keys that allow you to access that wallet. So Coinbase has a handful of hot wallets that have, hundreds of millions or billions of dollars in funds within those wallets. And then Coinbase, on our end, we kind of split off like, okay, this is owned by Joe and this is owned by Susan, et cetera. So you don't have to worry about that crypto wallet. Coinbase kind of like has the safety deposit box, and then we just give you your funds within that little wallet. Separately, you could download an app, or you could have a hardware wallet as well, but the app is the easiest way to describe it. So you could download Coinbase Wallet right now, and when you sign up, it says, okay, we're going to create a crypto wallet for you. And that's you just going out to the, the ledger. If it's Ethereum, you go to the Ethereum ledger and you create a new wallet for yourself. Now you have your own sort of vault and your own safety deposit box that only you can access. And you have that private key. Generally, it's like 12 random words. So it's like, burger, window, hamster, and it's just like these 12 words, and that's kind of your password. And then it's not custodialized. Coinbase can't do anything to that wallet. You're the only one that can do anything with it. And actually, if you wanted to stop using Coinbase Wallet and use some separate wallet provider like MetaMask or something, all you have to do is have that private key, and that allows you to access those funds within that wallet on that ledger. So this is important in that, sometimes it's nice to have something custodialized because it's more secure. You can have your password, you can have two-factor authentication, the traditional things that you're used to. For self-custody, that's a larger degree of responsibility. You've probably read stories about people that lose their key to their crypto wallet, and they've got hundreds of millions of funds that they can no longer access. So it's kind of up to you on how you want to do that. The final thing I'll say is if you want something like an NFT, it's generally better for you to have a self-custody wallet to store things like NFTs, because NFTs often give you access to decentralized apps. So you connect your wallet. Let's say you have a favorite artist, like Bruce Springsteen. He would never do this, but if he did, you could go into Bruce Springsteen's website and you could connect your crypto wallet, and then it could see that you had this like membership NFT for the fan club. And so in that way, NFTs give you access to different things, and you'd want your own self-custody wallet to be able to do those. Coinbase can't do that for you. So that's kind of the big difference between self-custody and custodial.
And that self-custody, Clay, we all hear it, but it really is gone. Like you lose your private key, there's no like backup.
Yeah, maybe 150 years in the future, there will be advanced quantum computers that could crack these codes, but the degree of encryption on those is significant enough that it is unreasonable to assume that even a nation state trying to hack into your self-custody wallet would be unlikely to be able to do so in any reasonable time frame.
Okay,
and it's cool. Really, it's free. I would everybody who here, if you don't have a crypto wallet, just get Coinbase Wallet, MetaMask, or whatever. Of course, I like Coinbase Wallet because I work with that team. But set up your own crypto wallet and go buy an NFT for $20. Gas fees are way down right now. Just to kind of go through that flow. It's really interesting to sort of interact with the ledger in that way. And then signing into something like OpenSea or Coinbase NFT to see what that connect your wallet flow is like. People are used to open authentication. So you can, like, when you go to a website, you can create your own username and password, or it's like connect with Google or connect with Facebook. And that's sort of like a shared single sign-on. That's the same thing that having a self-custody wallet allows you to do. There are these things called dApps, decentralized apps, that your authentication, your user name and user credentials and user possessions are based on what's in your crypto wallet, and you connect that crypto wallet and then you're ready to go. And so it's really important, I would say, for everybody here to try that out, because it gives you a better real world sense of like, oh, wow, like this is what it's like to have a wallet, and this is how it allows me to interact with the Web3 space.
So Clay just talked about some reasons or some ways that you might utilize a wallet outside of it just being for storing assets or currency. So think about it. So I think that's important, right? Because as Clay just talked about, this can be like your sign in, like your portal, linking up with other tools and other ways that you use those assets versus just being about like storage for coins. So I think that point is really important. I want to jump in because I think there's a lot of questions around regulation, how regulation is playing in the space today, and also what we think is coming. So I want to fast forward a little bit and talk about regulation. Do you think that regulation, a couple of things, do you think that regulation is one of the things that is holding the space back? And why or why not? And I'm going to ask Peter to kick us off with this one.
In terms of regulation, I think there's two ways you can look at it broadly. On the technological development side, I don't think regulation is holding things back. These are open source protocols where developers all over the world are working on them. And as I mentioned earlier, like these are peer-to-peer technologies where you can build new kinds of decentralized financial applications, new types of decentralized gaming applications, et cetera, et cetera. People will continue to work on this technology as it evolves because it's easily accessible and it's spread across the globe. So even if one jurisdiction says, okay, this technology is theoretically illegal, that's not going to stop people in another jurisdiction that is promoting this technology from continuing to work on it. So I think this technology will continue to evolve regardless of what the regulatory landscape looks like, simply because these are open source technologies that are permissionless. On the other side, if you're looking at institutional investment, which is very large relative to retail, and up until this point, crypto has been dominated by retail flows. Until there is regulatory clarity in the developed countries such as the United States, I think that institutions are going to be hesitant to invest aggressively across the entire space. I think at this point, it's clear that Bitcoin will likely be regulated as a commodity. And so institutions have been comfortable allocating to that because it seems that there's a clear existing regulatory framework around that. But when it comes to, say, decentralized finance, it's much less clear whether these assets are going to be regulated as commodities or securities. And if they're regulated as securities, there are a whole host of KYC and AML procedures that centralized financial institutions are fine dealing with, but trying to apply those to a decentralized protocol, it becomes extremely difficult and confusing. So until existing regulators come up with a clear regulatory framework for the large institutional investors, I think that the flows into the space are going to be more muted, and they're going to be focused on the largest assets right now, Bitcoin being leader, and I think soon Ethereum will follow. But until we see clear guidelines, I think the rest of the space is going to see muted inflows. That's kind of how I think about things more broadly.
I want to open that up. Ben or Clay, do you have anything that you want to add?
I think Peter covered it comprehensively, and there is that hesitation for an institution to participate in the asset class without that regulatory clarity and even tax clarity. So a common way to verify transactions on the blockchain is proof of stake. And that current consensus mechanism for verifying these transactions, if I am staking my tokens on that blockchain and I get rewarded for staking my assets and verifying those transactions, it's currently unclear the tax ramifications on receiving tokens of that blockchain that I'm on. So even just like a simple example of where there's uncertainty prevents larger institutions from participating and staking their own assets on a layer one chain or even any chain. So I think over time, we'll have more clarity. What's been fascinating to see is crypto has become a more political talking point. And I think as the midterms arise and as over time, currently it hasn't aligned with either political party, but I think more technologically forward candidates are aligning themselves with the crypto cause. and are championing crypto regulation because they want innovation and the entrepreneurial spirit to reign true in the US in this asset class.
Yeah, the final thing I'll say, so I deal in this space a lot, so there isn't too much that I can say. We do work with a lot of asset issuing teams, so they're kind of like the development teams that create these assets. And not only does my team review from a legal standpoint against existing securities laws, we have a lot of asset issuing teams that are hesitant to even list on a US-based exchange like Coinbase because of the uncertainty within the regulatory space broadly. So there's a lot more that you can sort of read about via articles and stuff, so I won't get into it. I would say, as Ben and Peter just mentioned, it is worth, if this is something that you are passionate about, figure out what the stance is that your local or state or national representatives are taking, because there are definitely a lot of candidates out there that are more crypto forward and want to drive towards regulation. So it's important for us to be voting based on our interests. And I do think that the broader kind of business impact and entrepreneurial spirit that we try to cater for within the United States should lead to updated regulation that creates clear path forwards for anybody that wants to create any sort of crypto asset so that they can properly designate it and then make it available for trade in whatever way they see fit. But right now, mainly just due to uncertainty, there is a chilling effect that that's having an impact, and we're seeing more activity broadly overseas than domestically.
So Clay, you just got into, and Peter as well, a little bit about what do you think the consequences of unfavorable regulation could be? Can this kill the market's momentum? Clay, we'll go over to you first.
Okay. Yeah, it can kill momentum to an extent. I think Peter, and you can speak on this more, Peter, when I pass it to you, but crypto is sort of unstoppable at this point. So even if there might be not a lot of activity with the United States, crypto and Web3 is borderless, it's decentralized. So as long as there's someone out there that's interested in it, it will sort of proceed. I think by not having the United States as active in participating can create maybe a slowing of progress. It's like we've got Silicon Valley, so like let entrepreneurs do whatever they want to do. And if we're not seeing a lot of entrepreneurs in the United States, instead you're seeing entrepreneurs overseas that can sort of more nimbly move in this space, that is kind of an underlying impact. But broadly, the United States could outlaw cryptocurrency tomorrow, and I wouldn't be concerned that the pace of progress and development would continue generally unimpeded. But Peter, interested in your take as well.
Yeah, I think we've already seen the implications of the US being slow on the regulatory front. We've seen countries such as Switzerland and more recently the Bahamas start to emerge as these crypto hubs where you have multi-billion-dollar foundations and multi-billion-dollar crypto companies now operating. And so I do think if the US were to come out with unfavorable regulation, it would have this continued dampening effect on the market. Like, given the uncertainty we've seen, it has kind of slowed things down a bit in terms of allocating to the space, especially in the United States. But I think regardless of where the US ends up standing, other countries are using this opportunity to jump ahead and to lure in some of the most innovative companies and technologies in the entire world. And so I actually think the US, has this opportunity still to be a leader, similar to how they were a leader with the internet. But if they continue to drag their feet, other countries are just going to offer very attractive tax incentives, very attractive working conditions. And those places, I think, are going to emerge as very dominant crypto hubs. And then you're going to see different industries kind of emerge around that. One specific thing that I think regulation is having an effect on right now is decentralized finance. That is a big area of the crypto space, but giving existing securities framework, it might be the case that a lot of these assets are securities, and that will likely cause some short-term confusion around, how they're regulated, who can invest in them, et cetera. But at the same time, I think there are other areas that, like, regardless of the regulatory situation, are growing aggressively. One area being gaming and the idea of the metaverse, which like, if you think about COVID, we saw a dramatic acceleration in the adoption of digital technology and the idea of socializing and doing work remotely in a purely digital environment now being accepted as the status quo in a variety of industries. And when it comes to socializing, especially younger generations are extremely comfortable with this idea of interacting digitally and that being the primary social environment. So I think regardless of the regulatory stance, there are certain areas of this space that are massive secular trends and that are going to be extremely difficult to slow down. So that's kind of how I'm thinking about the regulatory space as of now.
Thank you all for those insights. I know this is a topic of conversation all across the internet. I see so many articles about regulation, where things are heading. Peter, you mentioned Switzerland. Are there other countries that have been really forward in this space?
The Bahamas more recently has been very friendly. FTX is now global there, which is one of the largest cryptocurrency exchanges in the world and has a very large share of trading volumes across both spot and derivatives. But there are like a ton of companies in the space are based outside the United States. And I think you're going to see more countries, besides Switzerland and the Bahamas emerge as crypto hubs. And I think that the primary drivers of that are going to be extremely attractive tax incentives, because now we live in a world where a lot of people that work in crypto are remote and they can easily move. And so the idea of paying, zero capital gains tax is very attractive, especially if you've been holding cryptos for say 3, 5, 8, 10 years, and you have very large gains. And so I think like those kinds of moves are going to draw in a lot of crypto whales. And then they're going to either build companies or new protocols. And then that's kind of a flywheel effect of attracting other developers and early crypto adopters into these countries and be very positive for those economies.
I want to, I'm just being conscious of time. We have so many things that we could talk about. I do want to talk about kind of research and evaluation in terms of what are some of the factors that you look for when you are evaluating a crypto asset. I want to kick that over to you, Ben.
Yeah, absolutely. So one of the most important new unlocks that crypto enables is transparency and everything being built in public. And going back to Clay's discussion about wallets, you can see the assets that sit within a wallet, and you can also follow transactions. So that is an important thing just to keep in the back of your mind, is that with tools like block explorers and Etherscan, you can actually dig into specific tokens, specific project, specific wallets, and actually dig in and start to unveil information. When I look for a specific crypto asset, I spend a lot of time on trying just to understand the technology and understand how the underpinning asset, oftentimes a token, accrues value. And what is the purpose of it? What is the competitive landscape? Similarly to how you would evaluate an investment opportunity if you were a venture capitalist or if you were a hedge fund manager. What is the opportunity set that's available? How does this protocol or project support this vision or mission? And then how are they able to capture value for offering a service? So in my mind, it's important to try and really understand the project, the competitive landscape, the market opportunity. But then beyond that, you can also take a look into the project. Oftentimes via Discord, their website, building in public, their snapshot, which represents their governance. So you can see real-time discussions that are happening within the community among the developers. And I think this is one of the beauties of crypto, is that as an outsider and someone trying to learn, you can pop into a project and get a sense for what is going on, what's being built, and even start helping out and potentially earn tokens for lending your expertise or participating in whatever means you can. So I think it's easy to get deceived by fake community when bots just flood a Discord or people buy fake followers. But if you do deep research and you really try and evaluate the active members of the community and what they're actually building above and beyond just the initial due diligence you did on a project, I think that'll give you enough of a comprehensive understanding of the project to be able to make a determination whether you think it's a good buy at that asset price.
I can add a little bit from my perspective. I think reading white papers is always really important. So on Coinbase, if you look up an asset, we link out to the white paper. And I think white paper, you would actually be surprised at how digestible white papers are. They have technical details, but they're also good kind of like business case descriptions of what the asset's good for. I think a lot of crypto trading recently has been based on kind of momentum, and there are things like pump and dumps and stuff that happen. So I think, in my opinion, it's better to take a long-term view and find a project that really resonates you from a use case standpoint. Do some research on the team. That's a really big one, is what have these people done in the past? So kind of put on like your venture capital hat and be like, I really like this founding team. That's a really good place to start. And then like as an example, so something that I think is a really high quality asset is something called basic attention token. And what it broadly is trying to do is like when you are browsing a web page, let's say you're looking at a blog post or something, rather than that blog post serving you a bunch of ads, you have the ability to actually kind of like tip that creator on like a as you go basis. So if you read a blog article, it just pulls 10 cents of basic attention token out of your wallet. And then you don't see ads. And in my opinion, ads in the ad industry is tearing society asunder broadly. So something like basic attention token, I just really like it as a concept, because if everybody could just sort of pay a small amount rather than have your data harvested and served out to these sort of conglomerates, that's kind of a better approach. So I'll just keep some basic attention token for 20 years and hope that it pans out. I think the short-term trading thing is a little bit more rife for despair. So beware if you're just trying to earn a quick buck or something. Linked to Brave, which is the browser that is powered by BAT. Peter, go ahead.
I like to think about three things: sector trends, usage, and token economics. So crypto has gone through many cycles, and this technology continues to evolve. So something that was an attractive investment opportunity in 2014 might not exist today or just be archaic from a technology standpoint. Similarly, like new sectors just can emerge overnight. Like we saw DeFi explode in 2020, then we saw the metaverse explode in 2021. I think we're going to continue to see new sectors emerge. So from an investment standpoint, it's important to be aware of how this technology is evolving, and then based on that technological development, what sector looks attractive from an investment standpoint. From there, you can start to look at, okay, where is actual usage? If these protocols or assets are not being used at all, it's very difficult to argue that they have value. So if you see a situation where a coin or protocol is starting to be used a lot, it's a good indication that users and investors see value. From there, we then dig into the token economics. And so with crypto, a lot of times you have situations where these assets have multiple demand drivers, and then either a limited or disinflationary or even purely deflationary supply schedule. And so if you see a situation where there's a significant uptick in usage and you can identify what the demand drivers are of the asset, you then compare that against the supply curve, you can actually start to model out what the present value of this asset looks like based on a variety of growth rates. You can essentially do hybrid DCFs. And so those are the three things that are very important to me when I'm looking at a potential investment. And having now invested in this space for several years, like I think is a good way to think broadly about investment opportunities in this space.
So I think this is a good point with what you all just brought up to jump into really quickly. And then I want to go into a different topic. But just what are resources, podcasts? Clay, you mentioned the white papers that are available on Coinbase. But what are podcasts? Who are people that you listen to? Where do you like to go for information?
Yeah, there's tons of stuff out there. I think if you're just starting out, like Wikipedia is a good way to just like get your feet under you as far as like what is all this stuff. You can just kind of read the Wikipedia description. From there are websites like CoinDesk is a popular kind of news aggregator and creator for crypto news. So if you just want to like keep a pulse on what's going on in the industry, that's a pretty good place to start. I'm a big podcast person, so I like listening to a podcast called Bankless is one that I really appreciate. But there are a wealth of them out there. I think Bankless is just kind of the one I'll recommend if people wanted to dive in there first. And if you want to go a little bit deeper, we use Messari for kind of a deeper and more complex level of reporting and research. So if you're a little bit more familiar and you want to go kind of to layer 2, I think Messari is a good place to kind of like really get in the weeds for news. But I'm sure Ben and Peter, they're more in this space. So I'm curious to see what you guys have to say.
Yeah, I'd say one venture capital firm that has done an excellent job of focusing on education and media is A16Z, Andreessen Horowitz. They have an excellent repository of different documents kind of outlining Bitcoin and Ethereum blockchains from first principles, and then building upon that and seeing how you can apply that first principles knowledge to more and more complex use cases. So I'd say definitely check out the crypto startup canon, I think it's called. But then Bankless is fantastic. Some other websites, The Block, I think is really good. Decrypt are some other good ones. But I'd say the hub for crypto, the town square, is Twitter. So I'd say spend some time on Twitter, search, top 10 crypto, not influencers, but actual builders, Vitalik Buterin, Balaji, Srinivasan, people who deeply understand this space. Follow them, see who they retweet, see who they like, and you'll start to piece together who are the different players in the space, which ecosystems they focus on, what they build and invest in. And to me, that's been a valuable resource.
Yeah,
Is there anything else?
Those are all great resources. Yeah, Messari, The Block, CoinDesk, Twitter is obviously a great place to get just constant updates on everything. And then if you want to dig more deeply, just going into the specific discords for a given project, that's probably where you find the most up-to-date specific information for a coin or a protocol.
Okay, I wanna switch gears. I've got a couple more topics depending on how much time we have. We all got to hear your amazing bios, kind of how you got into the space, all the amazing stuff that you've done. So I'd love to hear about a mistake that you feel like you've made, because it's always fun to talk about all the stuff that goes well, but like what's something that kind of went wrong or a mistake that you think you've made? And I'm going to kick that over to you, Ben, first.
I've made so many mistakes, it's hard to keep track, but I'd say there was a point in time where I was, participating in all different elements of the ecosystem, I was allocating tokens that I firmly believed in, Bitcoin and Ethereum, to longer tail opportunities, thinking, oh, I'll allocate some ETH or BTC to this long tail opportunity and I'll catch like a high flyer, exit that position, and then move it back into Bitcoin and Ethereum. And I would pursue these opportunities more so off hype rather than fundamentally understanding the project. And I'd say that has been cost me at that point in time when I was first starting out. However, I do think that taught me a lot about experimentation and making sure to use these protocols and participate in all these different ecosystems and protocols themselves, because oftentimes just being an active member using your wallet, opportunities arise. So you may have heard of airdrops. This is where you use a protocol or a project, and that project in return wants you to be an owner member of that protocol or project, and in return airdrops you some of their native token, which you could think of as shares in that protocol. So I've made mistakes through experimentation and trying to go further out on the risk curve, but doing that has also taught me where to be strategic in doing that, because you could in turn learn something or even become an owner in that asset as a result of it.
Okay, Peter or Clay? We're asking you for some secrets.
Yeah, I'll go ahead. So I started investing in altcoins, about 9 years ago, and that's the strategy I've gotten really good at. My main hedge fund is focused on that. One mistake I made was after 2017, where we had a very good year, and our firm had done well financially. We decided to try to build a high frequency trading operation. And I'd come from, a background of institutional investments and having run my personal account, but these tended to be longer term, buy and hold strategies. Back in 2018, there was still a lot of exchange arb and opportunities in our mind to make, lower risk returns that had much lower volatility. And so I hired a high frequency futures trader from Optiver. I hired a quant who was at Susquehanna Group, and then I hired another trader who was from Gelber Group in Chicago. And we built a variety of fully automated strategies across pure arb, triangular arb, market making, and market taking. And they were able to get an in-kind loan of like a large portfolio of altcoins where we owed just the coins back. So it didn't matter what the dollar value was, as long as we paid back the portfolio of like the specific amount of coins. That was the agreement. And so we built a targeting system where, as long as we stayed close to the target portfolio, we didn't have any dollar risk, because it was a market neutral strategy. And so we saw a lot of opportunity in late 2018. And so I made a decision to really scale it up and invest a lot of resources into it. And we saw a lot of success in early 2019, but then the big boys showed up, the large high frequency trading firms, who I realized have unlimited developer resources. They have strategies across all markets, whether it's fixed income, equities, options, whatever, that they constantly recycle into their crypto desk to try to find ways to make money. And so while we had a lot of edge in late 2018, early 2019, I watched that edge completely evaporate as guys that had unlimited resources, both financial and developer, just aggressively move into the space. And so what I learned is that it's really important to understand what your edge is and how to maintain that over long periods of time. And we've been good at running our altcoin strategy now for 5.5 years, and in my personal account even longer than that. Versus like you might see short-term opportunities and think, okay, yeah, based on my previous success, I can adapt and take advantage of that. But it's really important to understand what the competitive landscape looks like and how that might change in the future. And so, while I wouldn't do anything different in the past, because I learned a ton about high frequency trading. I learned a ton about different strategies across market making, taking, pure arb, triangular arb, and also just the general microstructure of the crypto market. It's important to just really understand where you're good and really focus on that, because I think the world is becoming more and more competitive, and crypto especially is becoming more and more competitive.
Both great advice. I think the mistakes that I've made, and I don't know if I'd call them mistakes, but I definitely got caught up in the hype, and I was in these groups with all people talking about oh my God, have you heard about this? There's an airdrop over here. I think if you get too lost in all of that, you're not really, it's not anchored in kind of your own passion and convictions. You're just kind of anchored in a flurry of opinions, and you're trying to sort of make a decision based off of a bunch of other people's opinions and what you perceive is going on. I definitely think for me, as someone that just is interested in the space and maybe wants to put some money into the space, understand things that are relevant to your own underlying passions. So like for me, I really don't like ads and I think that they're terrible. So like find a project that you think is working against that or trying to disrupt that. And then the other thing is crypto can move so quickly that often you'll see a really good idea and then there will be 7 different assets that have the same underlying utility that's trying to address the same problem. So through that lens, just be aware that, you know, sometimes it maybe would be hard to find the one that prevails or that kind of wins out. And sometimes you can kind of diversify across something like an index that takes, you know, 6 different things that are all trying to do the same thing. And you can kind of just like bet on that concept rather than you're trying to figure out which individual one is going to succeed. So yeah, try and just like hedge yourself a little bit as an individual. If you're going to do the short-term thing, make sure you're paying a lot of attention and understand something super well. Otherwise, sometimes taking a longer-term approach is just like maybe a little bit more relaxing of a strategy, and you don't get so concerned about, you know, what happened today to the next day.
Okay, I want to turn to, we are almost at time, but I've got one more thing that I would really like for us to talk about. So we talked about how the underlying technology is enabling projects that were not possible a couple of years ago, even sometimes right 6 months or a year ago. So I'd love to hear about either a DAO that you're a member of and something you're excited about there, or just a project that you've seen that might be interesting or surprising to this audience. Let's go ahead, we'll start off with Peter. And like I said, we'll have to go kind of quickly, but I think this will just be interesting to show a variety of projects and what you're excited about.
Yes, the one area I'm very excited about is what is known as layer 0. So up until now, we've seen like these monolithic blockchains, you know, Bitcoin, Ethereum, the other L1s, et cetera, where activity tends to be very siloed to that given chain. You know, in Ethereum's case, that's been fine up until now because the use cases have been more simple, whether it's peer-to-peer lending, peer-to-peer trading, et cetera, issuing NFTs. But I think as this technology evolves, interoperability is going to be extremely important because each chain has trade-offs, whether that's security or latency. Different applications need different parameters. And so I think going forward, you're going to see a world emerge where these blockchains start communicating and interoperating. And that's going to allow new projects to better design kind of their application around technology that they need for it to really work well. And so it's still very early, but these true layer 0 protocols where all different kinds of L1s can connect and or projects can just build and launch their own chain, I think is the next evolution of the crypto space, and it's going to impact all sectors of crypto.
Awesome. Ben, do you want to go next?
Yeah, there are a number of themes that I'm excited about: privacy, permission DeFi, gaming, the tokenization of real world assets. Probably the area that I'm most excited about because I'm closest to it and it's very tangible to me is the evolving community space and how they're leveraging DAO tooling and Web3 community, Web3 coordination products in order to have a decentralized group of individuals on the internet manage a treasury and pursue towards missions similar to how a company would. So I'm one of the early members of Seed Club, which, as I mentioned earlier, is kind of like a Y Combinator for Web3 communities. And one of the communities that pass through Seed Club is called Kraus House. And Kraus House is a Web3 DAO with the singular mission of acquiring a stake in an NBA team. So they are actively in discussions with owners in the NBA who are willing to sell a small percentage of their organization to this Web3 native organization, who would then be responsible for supporting the team and would be the first fan-owned team leveraging Web3 tooling. So I think that's a cool project because it's very specific, but then it's also indicative of how people can come along on the internet, come together and manage and operate a real world asset.
Okay, Clay, we're at time, but I want to give you the chance to answer this because I know you've got some interesting projects.
Yeah, so similar answer to Ben. I like decentralized autonomous organizations. So one that I am a member of is something called LinksDAO. And basically it's like 10,000 or so people that bought these NFTs at a fixed price. And the price of those NFTs that everybody paid just went to a treasury for the LinksDAO organization. And they're going to try to buy a golf course. They're trying to raise some private equity as well so that they can buy a more expensive golf course. But ultimately, there's probably going to be a list of like 4 courses where they're like, okay, we can buy all these courses. And then everybody that like possesses one of these NFTs gets a vote to come in and say like, I put my vote towards this one. And that's just really cool. You can imagine like a country club where rather than having to go through the stodgy old process, it's like, hey, you got one of these NFTs, just like scan it as you walk in the door and you're good to go. So I think that that's just sort of a cool disruption on the concept of ownership and community. And there's a lot of stuff out there that's happening. So I really like that sort of real world application of membership, ownership, participation, that kind of thing.
Awesome. Thank you so much, Peter, Clay, and Ben, everybody. This has been amazing. These are experts in this space. If there are things that you have questions about that we didn't touch on today, this is the first in a series, but also my email is on the Wond'ry website. So you're welcome to reach out to me and I can connect you with people that are in this space. As we've heard, the pace of innovation is very quick and there are new projects coming out all the time. If you want to see the recording of this, it's going to be available on demand through Vanderbilt's YouTube channel. So feel free to take a look back, but also share that with people that weren't able to join us today. Thank you all so much. It was so great to spend this time with you.
Thanks, everybody.
Thank you.
Thank you.